Hey, good afternoon. This is Mike Barnes, the financial first responder. Hey, have you ever thought about what it would be like to pay it off? Pay what off, financial first responder? Your property, silly. Look, let me tell you a story. When my wife and I started out on our journey and looking at homes and including real estate, we didn't think about some of the options that were available to us simply because we didn't know. And nobody really explained some of these options early on in our investing and real estate career. So, for the next few minutes, I'm going to talk to you about some things that I think you should be aware of. I think your real estate agents, your loan officers, your insurance agents, hell, even your financial planners or advisors should advise you on this information. Please like and subscribe my channel. Take this information and I hope it benefits your family. So, without further ado, let's get started. So, where I live at in the country, in the DMV, I'm going to give you some information that may be in my area. Now, depending on where you are in the country, it might be totally different for you guys. You need to do your research. You need to get with a financial advisor, someone who can give you competent information and share some things with you. So here's the example: your house or rental property, and this is the regular way most people do this. They go out and get a 30-year mortgage. Okay. Now, the question you need to ask yourself is how much interest was paid during the life of the loan or will be paid? Now, remember, mortgage in Latin, I believe, stands for to the death. So let's say that you're in the DMV area and you get a modest mortgage of 450,000. Now, I say modest because depending on the area you're in, homes could be less or could be a lot more. Let's say that, with interest rates being the way that they are, you're at 6.86% interest and it's for 30 years. Now, what I want to break down to you is this. As the financial first responder, when my daughter bought her home, I kind of walked her through this. She was 22, she's now 26. These are some things that you need to be aware of when you're going to purchase your home or rental property. So, first of all, we're going to take that 450, right? And depending on what your deposit is or your down payment, your payment would be, and this is assuming that you're just paying principal and interest, not taxes and insurance, okay? That PITI, your payment would be $2,951.67. Now, notice that is just your payment, principal and interest. That does not include taxes, which you have property taxes, and that does not include homeowners insurance. Okay? I'm keeping this very simple. But you would actually have to figure out what your PI, principal and interest, taxes, and insurance would be. Now, you're probably saying, well, wait a minute, Mike. You're saying how much would it be for this loan? Well, I'm glad you asked. Over a 30-year period, what we would do is we take that $2,951.67, multiply it by 360 payments, which would be $1,062,601.49. And we subtract it from your principal or the actual loan itself, and you would pay out over the 30 years $612,601.49 in interest. Now, there again, you need to understand that this is what you would pay out. Now, you're probably saying, well, wait a minute, Mike, Mr. Financial First Responder. That's a lot of money. Yes, it is. So let's talk about a 15-year mortgage because a 15-year mortgage is half the time, right? It's 180 payments. So we take that same 450,000, same interest rate of 6.86% interest, and a 15-year note or mortgage. And what that would then incur, that would incur you having a higher payment, principal and interest, of $4,009.59. Yes, it is a lot higher. I know that. That's why most people don't do this. Okay. There are some ways that you can reduce the payment even more, but that I actually teach when I'm teaching my courses. And so I'm just going to give you the basics right now so that you can learn the basics, right? So you have a 30-year mortgage, you have a 15-year mortgage. So let's look at this. If I'm paying $4,009.59 for 15 years or 180 payments, I would pay out 721,725.72. Subtract that 450 and you see I'm only paying out in interest $271,725.72. You see, that is a major difference between what you would have paid at 30 years and what you would have paid in 15 years. So I really want you to think about this when you're buying your properties, whether it be your first home or rental properties, or maybe you're looking at taking over someone's mortgage, a family member or so forth. Look at how much interest they may have paid or what you would actually pay if you took the mortgage over. These are some things that your financial advisor, your financial first responder, your financial planner, your investment advisor, whoever you do business with, should be talking to you about. They should be talking to you because your home, in most cases, is one of your largest assets that you can have. Now, in summary, depending on the financial needs that you have, you should consider the best plan for yourself and your family. You see, what it all boils down to is what you can effectively afford. And for some of you, depending on your debt to income ratio, meaning how much debt you have to your income, you're going to need to be anywhere between 28 and 36%. That is normally where you want to fall as far as debt to income ratio. 28% on the um, on the low end and as high as 36%. But remember, winter is coming. Interest rates are going to change. We hope that they fall. There's no guarantee. But as you go and look in this market, I need you to be cognizant of I could do a 30-year mortgage or I could do a 15-year mortgage. And there's some other programs out there that I didn't mention. Adjustable rate mortgages. Obviously, that means that it adjusts as your rate goes up or down, which means that you don't have the same payment. There's a lot of different programs out there that you need to be aware of. So, this has been Mike Barnes, the Financial First Responder. Please like and subscribe my channel. Share it with a friend or family member because you don't know this, but you might save them a lot financially. You might be the difference between them going bankrupt and them being successful financially. Look, this is Mike Barnes, the Financial First Responder. God bless you, and I hope you much success in your investment journey. Take care.